Welcome everyone. Today we'll be analyzing how my portfolio has been performing all the way since inception. Keep in mind that I have not been investing with this style of investment for a long time. I actually started back in October 2023. As you can see, my portfolio is currently 27.52% up in only 5 to 6 months. This, in compared to the S&P 500, means that I have outperformed it by 7 percentage points, which is pretty good. Keep in mind I'm a European investor, so I invest in euros, but I invest in American companies. I tend to try and invest into my portfolio every single month at the beginning of the month. So here you can see how the value has been evolving as I have made my purchases. So my first purchase was on November 2nd and I bought 3,000 euros, and then I have been making regular purchases all the way since. I only invest every month if I see an attractive opportunity. If not, I will just reserve my cash. And of course, if I see a super juicy opportunity and it's not the first of the month, I will still buy it. However, I am trying to keep consistent at buying at the first or second day of every month in order to follow a safer strategy and force myself to dollar cost average into positions. When looking at the return my portfolio has generated against the S&P 500, it has been a pretty fun ride. So you can see we started in the 2nd of October and we immediately fell down to 7% loss against the S&P, which was only losing 3%. So I was already doubting my strategy, but I kept going, and since then we started to gain traction and beat the S&P up until December because it was a very bad month. We started to buy Crocs, we started to get into that position very heavily, and that stock dropped so much, but then gained it all back in one day. And since then we've been doing fairly well against the S&P 500, safe to say. So we can see here the portfolio returns based on my holdings. Keep in mind that I only have 3 holdings right now. I'm playing a very concentrated game. I like the idea of diversification, but I also like the idea of having very few stocks because in that way I can first of all read all of their annual and earnings reports, track all their movements and analyze them closely, and then also not become overloaded. As well, since I started investing, the market I believe is extremely expensive, so I'm limiting my buys to those companies where I see that they are heavily undervalued. That is why, for example, MasterCard is such a small position in comparison to Crocs, and that is why S&P Global is also a fairly smaller position in comparison to Crocs. Today, for example, if we do a gain by value, Crocs has returned around $160, S&P Global has been fairly stable, and MasterCard has returned about nothing as well. But if we look at a longer time horizon, Crocs is the clear winner. I'm going to put it in percentage terms, it's easier to understand. The best performing stock for the past month has been Crocs, closely followed by MasterCard, and then SPGI following, lagging behind. S&P Global was doing extremely well, but it reported earnings this week, and it gave a very soft outlook on 2024, which made investors lose a bit of the momentum that this stock had going. However, I still love the stock, and I do still think that it's sitting at a pretty fair value. I might even pick up more shares of it in the following months. And if you don't want to miss out on that, check out the link of Patreon. It's free, all my alerts are free, and I offer no paid programs yet. In 3 months, MasterCard has been the clear winning, returning 17%, and this is a shame because it's my smallest position. And why do I only have $1,000 invested into it? Well, 1,000 euros. Well, because I was starting to build my position, and the day I bought, it just started to take off, and I didn't feel comfortable buying at higher prices. But as you can see, in the 6 month, MasterCard is the winner, S&P Global, and then Crocs, which will be reporting earnings next week, and I am expecting them to be very good. If we look at the closer performance and compare it against the S&P 500 and all the different indices, you can see that in the past month, I've beaten the S&P 500 and beaten the New York Stock Exchange. However, the Nasdaq has actually outperformed my portfolio. However, if we extrapolate it to 3 months, I've beaten all the indices year to date as well, and since inception as well, only by 3 percentage points, but however, I'm keeping this as a win. In the graph over here, you can see the historical return. The darker shade bar usually represents my portfolio, and the lighter bar usually represents the S&P 500. We can look at this by the excess return, which compares how I have done against the S&P 500. So for example, the first month, I lost by 3.6%, but the following month, I beat the S&P 500 by 6%. We're going to move to the allocation part of the portfolio, and since I only have 3 stocks, it's going to be pretty simple. The majority of my holdings are in Crocs, with SPGI being the next biggest holding, and then MasterCard. Of course, Crocs, I've been able to buy more of it since it's sitting at more juicier prices compared to my intrinsic value and the analysis I had conducted. And SPGI and MasterCard just took off the moment I bought them, and I didn't feel comfortable at buying them at higher prices. The cash on hand, it's fake. It's just that MasterCard paid a dividend this week and it's counted it as cash on hands. But you can see here the unrealized gain and the market value has been pretty well. All the stocks so far have been returning positive values. If we look at the trade analysis, this is a function I absolutely love. It basically shows all the buys I have made and puts them on the chart to see how well your execution actually is. Well, since the stock market has been increasing for the past 6 months without any trouble, it's not fair. This is better to look at a longer time frame. However, what's cool is to look at this stock by stock. So for example, let's look at my first stock, which was S&P Global. I bought all the way back in October 2nd, and immediately, of course, the price of the stock fell down all the way from 372 all the way down to 342. So I lost almost a 10% in just 1 month. And before I was able to make a purchase, it regained all of the price back, and I was able to buy at more or less around the same price where I bought the previous time. And of course, since then, the stock just shot up and I didn't feel comfortable buying at higher prices. Then if we look at MasterCard, it's more of the same thing. I bought very low and then it just shot up and never came back down again. And in case of Crocs, it's a bit different because it has been bouncing up and down, and I have actually managed to buy it on several occasions. So if we look at the 3-month chart, this is the exception I made. I bought it in the 21st of December of 2023, which is when I came by this incredible stock. And then on the 1st of January, 2nd of January, I actually made another purchase at a lower price, which managed to bring my average cost down. This was caused by Nike actually reporting lower than expected earnings, and everyone thought that Crocs was actually going to be suffering from the same thing. And one day they actually said, hey, you know what? We actually are on track to beat our record in terms of revenue. So the price of the stock shot up around like 16% in one day, and it's been going up and down but sitting pretty stable since then. So I just made my new purchase back on February 2nd, since the stock was sitting at around my average cost, and now it's starting to shoot up in advance of the earnings that they will be releasing next week. But if we look at all the companies, here we can see the efficiency of the different buys. For example, the last Crocs buy I have made has returned over 10%. The best Crocs buy I have made returned over 18%, and it actually compares this to the S&P 500 to see if you had bought the S&P 500 on that day, you would have made this much. Finally, it also has a dividend section. I'm not following the dividend section. I'm not a big dividend investor. However, some of my stocks happen to pay dividend. Of course, I did not buy them thinking about the dividend, but it's always nice to have that extra payment. So for example, today, or well, when you're seeing this video, yesterday, I received a MasterCard dividend for €1.70. And next month in March, I will be receiving the SPGI dividend on the 12th of March. So my portfolio yield is very, very insignificant with a 0.07%. So far, I'm really happy with the performance of my portfolio. This is, as I told you, a new strategy that I'm doing based on free cash flow and trying to find undervalued opportunities. And so far, I'm very happy with the performance of my stocks, especially with Crocs, which I'm very excited for the earnings that are supposed to come next week. So stay tuned. I hope you liked this video. If you did, please leave a like and subscribe to the video, and I'll see you in the next one. Thank you for watching.